Today, I'm sorry I'm a few minutes late. We're like 15 minutes late or something. I was literally outside with the three kids. We were de-weeding around the house, and I found these monster thistles, and I was getting a good workout on, pulling weeds. So it's like free cardio, free strength training. My hands are quite sore. We got about half of it done, and the rest I'm going to have the grass guy. I'm going to outsource to him. But there's something really therapeutic about chores sometimes, right? And teaching your kids the value of hard work. And even though it's not a good use of my time, there are some side tangent benefits, like the strength training in my arms and in my feet and all of that right now. I didn't have a chance to do anything, but I got a little pony going, a little pony morning. The kids wanted me to put it in. I didn't have a chance to shower, so I'm a little bit grunged out. But let's talk real estate. Let's talk stocks. Let's talk whatever's been up in your world and in my world in the last week, and let's get caught up. So I don't know if you guys have been watching, but the last 2 weeks, the market's just been ripping straight down. QQQ was at 333, now under 300, and seems every time there's a euphoric, opening, the market just sells it off straight down. Euphoric opening sells it off straight down. We've had like 2 weeks of straight down, and your boy's been shorting. I am short the market. I am bear right now. Long term, I'm still bullish, but short term, I'm very bearish right now, and it's just something that I think for the next 6 months we're into some muddy waters. Like I've been saying for the last 6 months, real estate's in for a bunch of pain. Crypto's in for a whole bunch of pain. Any tech stocks, any growth stocks, anything that doesn't have really strong underlying fundamental cash flow and net operating income is going to get squeezed in times of high interest rate environments and high inflation at the same time. The Fed is in between a rock and a hard place. As they crank on rates, which they have to do because we don't think they're serious unless they do. I'm serious about fighting inflation. If they don't continue to crank and raise rates and bring pain to the economy, we are going to have massive running inflation. On top of that, we've got a war going on in Europe. We've got an energy crisis going on in Europe. Remember, they are not a producer of all of the energy, oil as an example, that they primarily need to keep things going. So they're talking about 18% inflation in the UK this winter, primarily driven by oil prices and specifically energy, some of the energy stuff. So energy prices are crazy. That's going to translate because they use those fuels to transport any of your materials. Some of the largest metal manufacturing plants in Europe, that's going to have supply chain ramifications. And when those plants shut down, the price of things will go up. It will drive inflation further. Rates will have to crank higher. It will hurt real estate more. It will crush businesses more. The Fed will also be squeezed because they have some of the largest deficits in history in the first world nations. So we're going to have a situation where the Fed can't afford to even make their interest obligations as the interest rates rise, the obligations they have to other countries. And so they will have to hire more people, which is why the Inflation Reduction Act that Biden put out is going to almost double the size of the IRS agents out there so they can collect more tax revenue from you. So not only are they going to destroy the value of your dollar, not only are they going to crush your real estate, not only are they going to drive your stock prices down and the value and the buying power of your money, but then they're going to tax the shit out of whatever you have left to pay for these obligations into the short term. So we're in for a perfect storm and a world of pain. The minute that we see the Fed pivot, we see that inflation starts to trend down for a number of months and the Fed gets dovish and they say, hey, we can ease off the brakes. We've put you guys into a recession. The economy is not growing. Jobs are not great. People are getting laid off left, right, and center, which is what's going to happen. Energy prices are all-time highs. Real estate's crashing. When all of that happens, that's when the Fed can pivot and say, hey, we need to stimulate. Because right now, if you look at the money supply chart, they haven't printed any money in months. And that's been fantastic. We're almost flat on the money M2 supply. That's what you want. That's what I've been wanting to see. COVID was artificial. And so we're coming back to reality and it's really great. The economy hasn't grown enough to justify the money supply. And so effectively, we're going to have a rock and a hard place. So no matter what happens next few months, we know it's going to be turbulent. I think there is a potential towards this bottom, though, for those of us who can become liquid, can stay liquid through this time, cannot make really risky decisions that result in us having no liquidity. But if you can put some money aside, you can dollar cost average on these big dip days. It's my prediction that we will test June lows on the NASDAQ. So I do think that, can you see me? Can you hear me? Goddamn internet. Can anyone hear me? Can anyone see me? Are we live? The timer stopped going, so I don't know if we're live. Smash the like button if we're live. Drop in a comment if you can hear me. Oh, these darn crypto mining machines are slowing down my network. That's actually probably true. That's at least a part of it. And we have like 6 TVs going. There you go. Okay, cool. Okay, someone said, what's up, Mike Hopewell as well? I'm doing well, thank you. ETH to 500 generational buying opportunity. I honestly believe that that's a possibility. We're too low right now for me to want to dump. I have a bunch of ETH and I've dumped some of it and I've thought about dumping the rest. For me, it's like in 5 or 10 years, I know it's going to be 10,000 a token. And so part of me is like, just hold, whatever happens, happens. Yeah, I could see an argument for selling now and then buying at the bottom. Things are going to get worse. I think that there are some bullish signals for 2.0, but when 2.0 comes in a few weeks and we move from proof of work to proof of stake with ETH, there could be an opportunity. Again, I still think crypto should be, and by the way, I love what the blockchain is going to do. I love that the smartest and the best people in tech right now are working on the blockchain. They're working on projects related to blockchain, to cryptocurrencies, to decentralized finance. So the smartest minds in the world right now, coming out of some of the best programs in the world, are working on this. So there's value there. So to say crypto has no value, blockchain has no value, the world's going to stay centralized and not going to be decentralized, no. Like, those projects are going to manifest into real value, right? So it is one of those things where there is value long term, and I think it should be 10-20% of your portfolio. That said, we could have a winter or a crypto winter where only a few emerge victorious, and some of these altcoins, there's a risk that it goes to zero, especially with some of the sketchy altcoins, right? So just be careful, guys. I don't know if ETH will ever overtake Bitcoin. Hard to say. I am bullish. It is a small percentage of my net worth currently. I could see an argument. I know a lot of people who I talk to who are in that crypto space and are watching the charts and who are versed on this crypto winter that we're going into. What I know is that speculative investments that are focused on growth, focused on tech, focused on the future, they will pay off. Many of them will pay off long term, sure. But while the Fed is raising interest rates, there is no capital. When government bonds start paying 8-9%, it's really hard to raise money in the tech space. And so a lot of these guys will go under just by sheer lack of liquidity. And so there'll be a buying opportunity, a consolidation, a lot like we saw in the dot-com bubble. And then the solid names will emerge and become giants. So there will be, I think it's a once-in-a-lifetime opportunity. Like, when are we going to have another opportunity to buy real estate, for instance, in Ontario right now, at a 30% discount from where it was in February? And we're talking about potentially getting to 40 to 50% discount. That is a once-in-a-lifetime correction that most of my followers watching this in Ontario have been like, hey, there's no opportunities, I can't buy a property. It's like, we're at a 30% reduction. We're dropping 3 to 4 to 5% a month right now in the real estate sector. That's huge. Cap rates are rising. Also, because people aren't buying right now because they can't qualify and can't afford payments, they're all renting. And so rents are jumping 20-30%. They're rising. So you can buy these buildings with low rents, get the rents up, increase the net operating income, and then refinance the building and pull your equity out and own the property with none of your own money. Just created equity from putting in the sweat work to turn these properties around and increase the net operating income. Especially in the commercial space, or rather in the larger residential space, there's huge opportunity right now. Just because rates are where they are, it makes not a lot of sense to buy at a 6 cap or even a 4 cap when you're borrowing at 6%, right? The spread is not there. It should be like you're borrowing at 2% and the cap rate's 6, and it's like your return on asset, your ROA based on your cap rate and your net operating income is triple what your cost of borrowing is. That makes sense. It's like, now you have a spread. Now when you buy a property, you go through all the headaches of dealing with the tenants, you make some cash flow every month. It's not just a speculative investment that someday it'll go up in value. That said, if you could buy now and be on a variable product that would then shift down as the Fed lowers rates later, because our long running rate of the North American economy is about 3%. So we will see interest rates float back down to 3% at some point to match growth. We want inflation to match growth. We want our interest rates to be at a relatively similar to inflation, right? So that's what we need to see. That's what we're moving towards. It's going to be painful in the next 6, 12, 24 months. But what I know for sure is that 10 years from now, asset prices are double, triple, quadruple. I'm talking the NASDAQ, the S&P 500, any properties that you buy. So keep that in mind, right? Like, it feels like the world might be ending, and maybe you're stuck holding a property that you now can't get out of. You're like, you know what, I'm making $500 a month, but I bought the property in February, and now the market's down 30%. You bought a property in Oshawa, you bought a property, whatever, in Toronto, and especially in Oshawa, you might have bought it in February, you put 30% down, your 30%'s gone. You have no equity in the property. The bank owns probably more than the property's worth if it had to sell with net of commissions and closing costs. So there's no incentive to sell, and that sucks. It's shitty. You might have lost your life savings putting it in buying a couple properties at the peak. You can't time the market, but what time in the market will heal those wounds. So if you were smart and you bought cash flow properties like I talk about, you're making $500 a month or $1,000 a month because rents are rising right now, specifically 25% year over year. Rents have increased. In places like Florida, it's 35% rents have increased. So we're seeing significant rent increases, which is great. If you can hold the long term, I promise you 10 years from now, that property you're currently underwater on will have generated you hundreds of thousands of dollars in upside. So just stay the course, hold the properties. This isn't probably a great time to dump. The best time to dump was obviously, February, March, April, May, June, when I was screaming on my channel every week. In short. So again, you can be long the market, no problem. I think in the long term, it is smart to be long the market and to be long real estate. I don't know, unless I do see the arguments though, people reaching out saying, hey Mike, should I sell this property? I have this other opportunity to chase, and it's, I can sell my property for 600 and buy 2 more at 300 that are undervalued right now. And it's like, yes, that makes sense. If you can take the capital and put it to work somewhere else and have it earn more for you, I'm always a fan of hearing those arguments. And I think that in a lot of cases, even net of transaction costs and taxes and everything else, it can make sense to rebalance your real estate or stock portfolio to optimize for maximum cash flow, maximum ROI, and in your business too, right? Like if you can pull out some liquidity right now, it would be prudent, I think. Having liquidity in a downturn is the best thing you can do. So how do you prepare for this? You get liquid. If you don't have any cash right now, pick up a side hustle. Like maybe on the weekends you're doing rental work and you're making $1,000 every weekend because you're working, Friday night, Saturday, Sunday. And that gets you an extra $500 or $1,000 every 2 weeks, a couple grand a month. Over the next year, that could be 25 grand. You could put it into the market, and that could turn into 100 grand or 200 grand over the next 10 years, right? Over your lifetime, that's $1 million difference. So people say, oh, I can't put in, I can't do evenings and weekends. I can't pick up a rental property. I can't take that project on. I can't work on the side. Yes, you can, and you should. And now is the time to get that second job, to get that side hustle. This is the time where it's most important to have liquidity. In the bull market, okay, I can understand staying in cash, having reserves, being afraid and apprehensive to get into the market. That makes sense. Now is not the time. As we continue to go lower, it's going to be a great buying opportunity to dollar cost average in. So anyone who messages me is like, hey Mike, I went all in at 280 on the QQQ, on the NASDAQ ETFs. It's like, okay, it might go lower, I don't know. But in the long term, 280 is a great price because the QQQ will see 400 again in the next 5 years for sure. So that means you could get 30, 40% upside. Great investment. Could it have been 50% if you timed the market perfectly and got a rant at the bottom? Sure. But none of us have a crystal ball. None of us know. At any point, the Fed could go from being hawkish to dovish and the market just rallies 18% like it did in July. I think we're going to see retracing. That was premature for sure, in my opinion. I stayed short the entire 18% up. It was painful. And now I'm regaining all those pains. It's interesting. So I was in Toronto. Was it last week or the week before that? I think it was last week. And I watched The Big Short. We watched Michael Burry's movie, played by, what's called Loaded Cast. It had Brad Pitt in it. It had Ryan Gosling in it. It had my main man, Michael. Is Michael Bale? Yeah. So it's just a loaded cast. Great movie. And the next day, the market started to fall. And it's fallen for 8 days in a row since I watched that. I'm not going to say that me being short and watching that movie did something, but just such a good coincidence. I enjoyed it. Okay, I'm actually almost neutral in my portfolio right now. So I've been hedging the last few days, hedging my short with calls. So if the market does rip down majorly, my calls just expire worthless. I've been buying calls to protect my short position that I have. And that's just because in case the market rips up again, I want to have those calls that'll rip up 100% to protect me against any upside swings. This market's so volatile, I'm not sure where it's going. I feel like there's a lot more downside possible and not a ton of upside. So it's hard to be long right now from a short-term fundamentals perspective. Long-term, I'm seeing some great valuations. Like I loaded up. I have my single largest position in my entire portfolio right now is Intel. And you might be like, why Intel? I have some NVIDIA and I have some AMD too, but I like Intel the most. 6 PE. Like, Intel's a beast. They have so much power and they're positioned so well with some of their partnerships towards the next 5 years, 7 years. I can see them owning, like, the world's going EV. The world's going, your phone, your fridge, your stove, everything has a chip in it. And they're a leader in the chip space. And I know AMD has taken some of their market share as of recently, and NVIDIA is also exploring in multiple channels. But I think Intel has a ton of potential and is severely undervalued. It's a great cash flowing stock that could pay a great dividend yield at long term. I get that they haven't branched out enough, and that's some of their analyst criticism. I first bought Intel at $55 a share after they dropped from like 64, and then I nibbled a little bit more at 49. I nibbled a little bit more at 45, a little bit more at 40. I nibbled a little bit more the other day, today when it was down. Love the position. 5-10 year play, really bullish on it. Remember though, guys, it's very difficult to beat the market. Like 99% of people do not beat the market. Most of my portfolio was just S&P 500, dividend quality stuff, some QQQ, all of that, like indexes. Brazil, Russia, India, China. Don't try to buy individual stocks in the long term. You'll probably lose to the market, but it's fun to try. ETH to 500 generational buying opportunity. Totally agree with that statement. For a small percentage of your portfolio, I don't think you should put it all in crypto. Stickman Finance says, I sold my house last month. When do you think I should buy? I want to get a deal. Well, it's probably a good idea to sell your house, depending on where you are, what market you're in, because every market's a little different. But in many of the markets that I'm following right now, we're seeing a cooling off big time. So I think it's smart to dispose and have capital, dispose of those assets. When do you buy? I think this winter is going to be a generational buying opportunity in real estate. I think seasonally, December is always a shitty month for real estate. Agents go away on holiday. Everyone's on holiday. No one's thinking about buying properties and running numbers. It's not their focus. So that's a great time to get in there with low competition. In combination with the fact that the market's been falling, we'll start to see some of the comps that are selling now closing in the later fall. I think probably it might take till January, February, March before we really see the bottoms of the market. Seasonally speaking, cold weather drives less traffic, which leads to less sales. The springtime is usually when people want to move. Also, people don't like to move during the school year. So you gotta remember, most people want to move, like they want to buy a house in May and then close on it in the summer when their kids are all out. That's the time you'll get all settled in for September to go back to school. If you're in the US, August to go back to school. So that's something to think about, is that a lot of families don't want to move mid-year. That's when you want to get in there because there's less competition. You're not competing against as many retail buyers, right? Even the institutional buyers are on holiday. They're taking their 2 weeks off for Christmas. So I think that in combination, that seasonal effect, typically if you look at the last 10 years of data, in fact, the last 40 years of data, every year, December is the lowest month. You see between the spring and December, every year, even in a flat year, you see a 10% variance in the average sale price. So you should see a 10% dip, seasonally speaking, but then on top of the fact that the Fed is cranking interest rates, people can't qualify, they can't refinance, they can't buy anything because they can't afford it, and they're all renting, and they're sitting on their cash and they're waiting if they have any. So all of those things coming in together, I think make this winter a great buying opportunity for real estate, especially if you're buying real estate that cash flows strongly. Because if you're wrong, and we're not at the bottom yet, and we could fall another 10%, who cares? One, because if your timeline's long, who cares? Two, you're getting cash flow positive and you're buying at a 40% discount from the highs of February. So maybe it's not the total bottom, but it starts to become a really attractive time to buy. And right at the point where we're at the very bottom, right at that pivot point, when comps are the lowest, when the market turns, things are going to get really expensive quickly. Like I think we're going to see, the minute the Fed starts lowering rates, people can qualify. There'll be a bullish energy and a pent-up amount of, remember how in COVID 2020 we had the whole dip in the market, and then the rally that we saw immediately after a 50% fall in stocks, we saw like a 50% rally in like 6 months. I think the same kind of thing will happen in real estate and stocks once the Fed lowers interest rates again. So once we're in a recession and they start stimulating the economy again, because right now they've cut off most of the stimulus, the money supply, they're raising rates. It's hard for businesses. When businesses were borrowing at, like 2% before, they could expand new product lines, hire new sales staff, whatever, try new investments and this and that. And real estate investors, same thing. They could buy properties at 2% cost of debt. It was like, oh, no big deal. You could borrow at like 1.5% interest. Now you're going to borrow at 6%. That's a 400% increase. That has significant impacts on what you can qualify for and what you can afford. And it translates to all businesses, not just real estate. Real estate is hit the hardest, but capital intensive businesses that use a lot of machinery and tech and have a lot of fixed loans or a lot of debt required to create, generate the revenue, those businesses are also hurt more acutely in these times. So those would be buying opportunities as we come into this winter, as things get worse. But that pivot point is going to be very, very attractive, I think, and people are going to turn and just want to go hard. We're all waiting for that point. We're all just sitting here with, a lot of us are waiting with liquidity, waiting to buy. A lot of us sold properties are waiting. It's like, when do we get in? So that moment is coming. It's not here yet. I will do my best to guide you guys through when I think that moment is coming. You will see me start buying. I just bought a cottage. It's a beautiful cottage. If you're looking for a cottage rental, it's going to be a personal cottage, but I will throw it up occasionally for rental near Grand Bend. Really excited about that. We have another property we got. It's 2 cottages on a lot with my dad, helping him out in that. So I am still buying right now. We just bought a property in Florida for $67,000. It's a 3-bed, 2 bath, or 3-bed, 1.5 bath on 2.5 acres of owned land. It's a brick bungalow. Needs a little bit of work, but these opportunities are all the time. Like ARV on that property is like $250. We just bought it for like a quarter of what it can be worth if it's fixed up really nice. If we fix it up like medium nice finishes and spend less on the rental, then maybe the ARV is like $199, $200, but still like 60, mid 60s, a great opportunity. So people are saying, hey, I'm waiting, there's no opportunities. There are opportunities. You just have to get out there, network, talk to people. I'm just calling wholesalers and calling realtors and calling people in the field and saying, hey, do you have anything off market? Can you send me anything? Whatever you got, I'm ready to go. And I just tell them I'm a cash buyer. I'll make it really easy for you. You don't have to call anyone else. I don't need to do a bunch of inspections and financing conditions and all these things that are gonna slow down and maybe risk your transaction. I'm the easy call. And people always make the easy call first. So that's what you gotta be, is the easy call in these times. That's how you get your deals accepted. It involves a level of risk. Like, we bought this property sight unseen, just from photos and videos. But I mean, literally the land, the 2.5 acres of land, as long as the structure doesn't fall over, we're in a net win, right? So, yeah, I practice what I preach. I continue to dollar cost average through this dip. Every time I sell a property, I'm buying another property. I'm just trying to buy at a big discount, trying to sell closest to the market premium that I can. I wished I sold my 6-plex for 1.15. You guys probably heard about that. We just started entertaining an offer right now on our triplex. Sold another duplex. I've been selling properties off every month since January, and I continue to dispose of properties. I have another one we're finishing renovations on, which has been with the city. I've been dealing with that for like a year, so it's a never-ending project. But it's a beautiful house hack for someone who's looking for like a coach house in the back. It has a beautiful detached coach house in the back, really deep lot in London. The main house has a 3-bedroom and then a 1-bedroom addition. We took the roof off and put a second level addition on it, and so it's beautiful. It's all well done under permit and all that. So yeah, that'll be a good one when I get to sell that one. I do have a lot of equity tied up in it, so I'm excited to dispose of that property. But if I had faster contractors and just a number of other things that come into place at the right timing, I could have sold that right at the peak, and it would have been a nice, more than 6 figures more than it's worth now. Same with 6-plex. I could have made $250,000 more if I had timed it right. But you know what? I'll do hundreds of deals in my lifetime, and I don't cry about trying to optimize for one, because the cash from that deal I just sold, I'll go on and do 2 or 3 more deals that'll be significantly under market and make a lot more money. So it is what it is. Keep planting seeds, guys. Keep making calls. Keep talking to people. If you can pick up a side hustle, now's the time to build liquidity. Yeah. Okay, let's do some live Q&A for a sec here. Hey, right on. You can hear me now. It's good. So this person says, I see a global recession is happening. China is in pain. This is true, by the way. I didn't touch on this since the last couple weeks, but China's real estate market is collapsing. Their banks and financing units are also collapsing because they're so tied heavily to real estate. On top of that, they have a number of other things. They have the largest or longest running and hottest heat wave that we've seen in a long time. I don't know why no one's talking about it. They're shutting down factories. Their main water supplies are drying up. China is in like crisis right now, like on the edge of a 2008 collapse in general. And that has significant impact as those factories close down, as Europe's closing down their largest steel factories and iron factories and a whole bunch of factories because the energy crisis going on and the inflation issues. That is going to translate over here. And so I think we will see more inflation. I think they will have to tighten harder on the rates, and it will be painful. But a great, great opportunity, guys. This is the once in a decade opportunity for us to go from, if you have like a couple 100,000, you can become a millionaire through these opportunities, right? If you can hold the course and build liquidity and work really hard right now, the dividends will pay off multiple fold. So this is the time to be extra hardworking, to be extra diligent. Probably not the best time to be quite yet investing in really risky stuff. But who knows? I don't have a crystal ball. The last part of that was Europe is in pain. So true. And so are all other third world countries. I can see a massive global recession. That's a great comment. I would almost pin that one. I seem to agree. I don't know if it will be so bad that, like the world ends and is riding on the streets, but there will be pain and there will be buying opportunities. Again, that's why I'm neutral right now in my stock portfolio. It's why I have a ton of liquidity right now. I'm just waiting potentially for the right opportunities. And the worst case is you miss out on some gains. Like if I'm wrong and the market pivots and the Fed pivots tomorrow and the market rallies 5 or 10%, I messed out on 5 or 10%. It doesn't change my life at all. No big deal. But if I'm in the market deep, long, on leverage, and the market rips down 20%, and as a result I'm forced to sell at a 50% loss, that could have significant impacts. A 50% loss of my net worth would significantly change my life. Well, no, it wouldn't. But if a 75% one would start to impact my lifestyle, and no matter what, a 50% would give me major depression. Like I'd feel like I worked for the last couple of years for nothing. And I enjoy beating the game of life when it comes to business and money and all of that. So it'd be devastating psychologically, and you don't want to be in that position. So that's why I say hedge right now, really important. If you're going to be long, hedge with some shorts. If you've got a lot of long positions right now, sell some calls in the money on those positions, or maybe further out of the money. You're like, you know what? I wouldn't get rid of my shares unless they come up 20%. It's like, okay, you can sell calls on good days. There's euphoria and excitement in the market. You can sell calls, which is like insurance, on your shares, and you'll get paid on those days where it drops down deep and you see those 3-4% down days in the market. It's a great day to dispose of those calls, to sell off that insurance, and it can protect your portfolio, and you can basically create less volatility. So you get less upside in this time, but because there isn't probably a huge amount of upside coming in the next couple of months, you're not giving up anything. You're just ensuring and protecting yourself. I, for one, would much rather have a stable portfolio. It doesn't have a huge rip up. I give up that huge potential to rip up, but I also lose the chance for a huge rip down. So that's just myself. In these times of recession, I'd rather have the liquidity, and I'd rather have a more stable portfolio. So that's where I am right now. Not doing any crazy trades right now that will result in me like having any crazy rips up or crazy rips down. Okay. So as a side note, I'm looking at single-family houses in the East Coast, and some realtors are still delusional. Houses sitting for 60 days in the upper middle class market, yet still list house super high. So you got to remember that each market is different, and within each market, there are different segments. So the ultra wealthy people in the upper middle class, they still have a great job. They're working from home, whatever. Their costs are, going up because of inflation, but they've got discretionary income, and maybe they bought the house for half of what they're trying to sell it for. So they can wait. They can wait 6 months. And so because that group of people can wait, they're not as sensitive to selling. They're not as desperate. It may take a lot longer in a deeper recession for them to have to sell. But there will be people in that category that lose their jobs in this recession. They might have a great blue collar or white collar job and lose it during this time. And so there will be people who will be forced to sell. You want to keep knocking those doors, and 1 in 8 of those people is going to sell at a big discount. And because there's no other buyers right now, the demand's so low, you can knock 20, 30 doors, and eventually you'll be in a position where you'll get a deal, and someone will be desperate enough that they'll take your offer. If you're interested in cottages right now, by the way, hit me up if you're interested in a lakefront, like owning on the water, private beach, owning like land on the water on Lake Huron, near Grand Bend area. I have something that's significantly undervalued on the water. Hit me up if you want to partner up on that and provide basically the financing, the money partner for that basically. It's a really interesting opportunity. I got a couple other ones that I'm working on in the pipeline too that are really quite interesting. A waterfront tends to hold its value a little bit better. over the long term because it's so rare, so little of it. And the Airbnb is just ridiculous in the summers. You can make 5,000-6,000 a week in some situations. It's just a beautiful setup. So if you're interested in that, hit me up. I'm circling on some right now. It's just there isn't a lot of buyer pools. You can offer 70 cents on the dollar, and sometimes people will take it. I just sold my house a few hours ago in Brampton for 1.049 million detached. It was originally listed for 1.325, and then I reduced it to 1.229, and now sold for 10.049. Do you think I got a good deal? I bought it for 480K. Well, it sounds great, Denny, that you bought it for 480,000. So selling it for $1 million, still over a double. Unless you did a huge renovation, even still, you've done very well for yourself. So, good idea to lock in some gains. Now, what do you do with that capital, right? That's the most important piece. Is if you have a good plan for what you're going to do with that capital, then you've done well. You've made the right decision, I think. We're not at the bottom yet. It's going to get worse. But you're right. 1.3 before, 1.4, now $1 million. That's a 30% drop. That's what we're seeing in the market right now. People who might have bought at the peak, who didn't buy it for 480, who bought your house for 1.2 at the peak. Now they're looking at, if they had to sell it, let it net, with realtor fees, closing costs, everything else, they're going to net like 980 grand. That's a shitty position to be in. And if enough of that happens, we start to have a chain reaction. So, yeah. So Raz says, as a realtor, are you buying your own properties for investment? Yeah, of course. I'm a realtor, and yeah, every time I buy a property, often I'll throw my commission into the mix just to get the price down. I can save, that's like right there I got like a 2.15% discount right away, because 2% plus, or more than that, 2.26%, because there's HST on commission of 13%. So you get the 2% commission off plus the HST savings. Right there, that's huge. Also, I get direct access to the realtor, so when I negotiate, I don't have to go through a third party. I can feel them out. There's a pause in their voice when I say, I think they would take 900. I can hear every pause and attenuation in their voice, and that gives me an edge, for sure. And in this market, interestingly, there are some on-market opportunities that are superior to what we're seeing in the off-market wholesale areas. Some of those wholesalers have really robust buyers lists with idiots in those buyers lists that are still overpaying. And some of these realtors have really poor buyers lists, and they're listing these properties and no one's coming through, and their marketing skills are not amazing, or for whatever reason that property's got something that is weird about it. You can get in there and there could be a value add opportunity that is not brought to the light. You can get in there and get great deals right now in the market because there's no one competing with you. So you could throw in an offer if it's listed for $1 million, throw in an offer for 800. And agents are taking it. They're presenting to clients, and clients are like, you know what? Market's falling. I need cash. Want to buy something else? Retiring, whatever. I'll just take what I can get. And after a few weeks of sobering reality of no offers and few showings, guess what? They'll circle the drain with your offer, and you'll get one in. So, really great opportunity to buy right now if you're careful. Bum, ba, bum, bum, ba, bum, bum. Denny Rose says, hey Mike, is there any way I can get in touch with you? Yep. So the way you get in touch with me is through Instagram, Mike Rosehart, or Facebook. Again, Mike Rosehart. On Facebook, I have the blue check mark verified. On Instagram, I don't. Same company. It's both owned by Meta. Makes no sense. But they wouldn't give me the blue check mark on Instagram yet. And then the other place is rosehartcapital@gmail.com. I'm happy to do coaching calls. I do paid coaching calls occasionally. I can even recommend or refer you to some opportunities that I know of if you're looking just to park cash. And lending right now is a really safe place to be, especially when you do secured lending. So first secured mortgage, second secured mortgage. First secured ideally, but never go over 80% loan to value, guys. You want at least them to have 20% equity in the game. So if the property falls, the market collapses another 20% on top of the 30 we've already had, then there's a big cushion before a dollar of your money is lost. Super important. Yeah, that's right, David. 70 cents on the dollar is 70% of what's asked. Yeah. So if they're asking, $1 million, you would offer 750, 700, no conditions, nice clean offer for them, and boom, away they go. That's a great way to get a property locked up. And right now, in February, no one would accept your offer and they'd laugh at you. But now agents are like, the market's pretty slow. We'll consider your offer. They bring it to their client considers it. Once in a while, you get a counter back at like 780. And you're like, let's have a little negotiation here. No one else is at the table. I'm the only one. And so you can get special terms. You say, hey, you know what, I'll give you $780, but you give me a $50,000 second mortgage, or you do this renovation, or you do this or that. You can put things in the contract that you couldn't normally do in a busy market. So this is a good time to be a buyer. We've shifted from a seller's market to a balanced market. Now we're getting into a buyer's market. So yeah. Evening, William. Good to see you on. Catch the replay. If you're watching the replay, hit the like, thumbs up button, comment, engage. That's cool. David says, I have a lot of equity in the primary residence, locked in at a fixed 4 years. That's amazing, by the way. Anyone who fixed, I wish I did fix. I did all variable rate mortgages. Oh, it's pain. I had variable rate mortgages, though, at like 1.26%. I had 5-year variables at 1.26%. They've now grown to 3.5 something now. So even though rates are gone crazy, you can't get a variable rate now under 4.25. So the discounts I was getting back then, juicy discounts. So I still think variable wins over a 5 or 10 year period. But in the short term, those fixed rates are juicy. If you have them, you're going to sell your property, port that fixed rate mortgage. If any of you guys have a fixed rate mortgage, you're watching the replay, watching this now, and you're like, hey, I just sold my property, what am I going to do with it? I'll find you a property, and we will JV on it. We will port that 2% mortgage together. I'll find you something off market. We'll joint venture. Like, I hate to see that go to waste. I hate to see the bank get back that money. They have a contract with you. If they've given you 4 years fixed at like 1.85%, you hold them to the fire. Don't let them have their money back so they can relend it out at 6% right now. No. We got to find a property, keep that capital deployed. It is hugely valuable. I can't understress it enough through these times to have cheap debt like that. It makes every deal really attractive. So yeah, if you have that debt, call me. Let's JV or something. I'll find you a property you can flop it on. Because financing is everything right now. Danny says use 300K equity over the years for renovation. There you go, 350,000. That's great. Still a profit. Take your money and on to the next. Any suggestions? There's lots of things you could do with it. Like I said before, the lending. There's you could space it out and put it. As an example, you could open an interactive broker's account and you could buy the S&P 500 ETF and maybe a couple other ETFs, so you're balanced out. You have your VTI, which is like your world index. You could buy your Canadian or your dividend type ETFs as well. So put it in your interactive brokers. If you put 350,000 in interactive brokers, you buy $350,000 in stocks, they'll lend you back 70% loan to value. Don't take all of it. Take like half, let's say. So take 150 or less than half, 45% of it. They give you 150 back. Do 150,000 in lending, and you still have $350,000 in stock. So think of $500,000 in asset exposure. The lending piece could get you 10-12% pretty easily. If you're willing to take a little bit of risk. If you don't want any risk, you get like 7-8% risk free. I'm talking zero risk, like GIC level risk, 50% real estate collapse before you lose your first dollar type of level risk. So like effectively zero. The government would step in before we had that happen. That type of lending, secured lending, where you can make great returns, almost risk-free. That's a great place to put it because you can borrow from interactive brokers right now, still at 2.5%. Now it's not 1% anymore like it was, or 0.5%. Now it's like 2%. But you can borrow at 2%, 2.5%, and then lend out at like zero risk. I'm talking risk-free mortgages at 8.5%. And so that's a nice spread, and you have zero risk. Like if it's $1 million house, you lend 400 grand against it for a secure position. So if they don't pay you, you sell the house for 400 grand. It'll sell instantly. $1 million house you listed for 400, it'll sell for 600, 700, like in a second. So you have instant liquidity whenever you want. You have super protected. That's the kind of like risk-free investments right now that are really attractive. There is so much risk out there, and so yeah, I mean, there's so much you could do, and you could expose yourself to the S&P 500 on the dip days and get invested in the market, and you'd be fine long term. Or buy another property. Lots of options. Yeah, definitely port your mortgage. You got to port it to a new property. Almost every mortgage product allows you to port. They don't want you to port, but you should. You definitely should. Call me. Call me if you need to port something. Reach out to me, and I said my email earlier. Mortgage up for renewal. Would you recommend going 2-year fixed or 5-year variable? So I would say fixed up until, well, I can still see an argument for fixed, but I think variable is going to win out. I still think you get a 4.2 variable instead of a 5.5 fixed, and I think that we might have another 1% growth. So there might be a small point next year where we eclipse, like if you got a variable right now, where you eclipse the fixed, but within another, like over a 5 or 10 year period, it's going to come way back down, and the variable is going to win. over fixing it at like such a high rate. So I would do variable right now. I have no interest in doing fixed. But if you had done fixed, so smart to fix in at 2 or 3%. Like, that's the lowest rates are ever going to be. Why wouldn't you fix in? Idiot for not fixing in. Here I am with 1.275% variable, which still isn't that bad. I think I'm at 3.5 or something now, so it's not the end of the world. But another 0.5% increase here in Bank of Canada could put me to 4% on the variables, which is still not that bad. It's better than the 5.5 fix that people are buying right now. I gotta wrap this up. I started the stream late and I gotta put my daughters to bed. So let me see if there's any more questions here. Do you port mortgages? Never heard of that before. Yeah, of course. Port city, of course you need to port. You are the port city. Yeah, porting is so key. You have no breakout fees. So normally you have a 3-month interest penalty or the differential breakout fee. So when you pay off a mortgage, you get a breakout. Let's say you had a $250,000 mortgage and your new house you're buying only need a $200,000 mortgage. You can do a 20% prepayment on that mortgage and then pay it down effectively to $200 when you close, and then reduce your fees because you've paid on the mortgage. Then pay no fees because you ported it. So I guess you don't need to prepay it down, but you prepay it down so you can port it, because the exact mortgage amount you need would line up perfectly, so you can prepay it down. If your mortgage is smaller than the new house you're buying, you want to port it to a bigger property, then you can do a blend and extend. So you bring that product over, and that mortgage at $200,000 is locked in at 2%, and then if current rates, you could lock on another mortgage for another $200,000, you get a total mortgage of $400,000, and then part of your mortgage is locked in at the old rate that you've signed a contract for. If it's a 5-year contract and you have 2.5 years left, they'll bring that over. You have another 2.5 years at that rate. So fixed rate mortgages are super great to port. You can't port variable mortgages, unfortunately. So fixed are really valuable for that reason. I did a lot of porting. I've done like 10 ports now, and it's great because it saves you like $5,000-$10,000 in breakout fees, and you get to keep your old rates. In some cases, their new rates were better, but in this situation, all of the fixed rates from 6 months ago are like 200% cheaper or 300% cheaper. So if you have one of those fixed rate mortgages and you're selling your house, you're selling your rental, don't get rid of it. Call me. Let's get you a property. I hate to hear that go to waste. Like, let me JV with you, and I'd be happy to go find the deal if you'll bring that financing, because you're bringing some real value. If you're bringing a 2% mortgage, that's extremely valuable. It's almost as valuable as a deal right now. So yeah, there's something there for sure. So how would you sell a home and hold a mortgage while you wait to find a deal? So usually most banks give 90 to 120 days where you've paid the money back to them, you've paid them the fees when you break out, but they'll credit you back all of the fees that you paid to break out of the mortgage if you can buy a new mortgage and close on the house within 120 days. I've heard of exceptions up to 150 days. So you have a short amount of time where you basically can port this mortgage. Effectively, you pay them back in full and there is no mortgage, but they'll give you the money back at that contracted rate. Because in your contract, it says, hey, if you get another mortgage approved with us, we'll allow you to keep that same amount at that same rate for the remainder of the term. The bank has gone out and done debt swaps to protect themselves on this money. So they've already locked in a contract price for that money. So for them, it's not a huge cost. I'm sure they'd like to have the money back, but they can afford to bring it to the new property. So all the big banks do porting, very common. Most good quality mortgage products. Some are portable between people. So if you have this is something people don't know, but this is something I used all the time in the wholesale world, in the off-market world. I call someone like, hey, I got a $400,000 2% mortgage. I'm like, can we put that in the contract? Can I have that mortgage? Is it assignable? And we'll call the lender, and the lender says, yeah, it's assignable. Boom, they can assign the mortgage. It's portable to someone else as long as that buyer is approved by the lender. The lender says, yeah, this buyer is equally good. We like this property. We've already lent on the property before. No problem. We'll keep the mortgage on, especially in commercial, but in residential too. Mortgages can go with properties, and that's huge. If you are an entrepreneur that doesn't have great income and you can't qualify for a mortgage right now, or you just don't want to go through the hassle of qualifying, that can bring a lot of value to you to have a property that comes with great financing at 2% instead of having to go get private financing at 8% or something, right? So there can be some really cool stuff you could do with assignments of mortgages, the portability of mortgages. Yeah. How do you get into private lending? So I just have a large network of people. Like when I go out there on my network and I say, hey, I've got $1 million, I'll fund some flips. I get a bunch of flippers calling me saying, hey, we'll take 500,000 on this. We got deals closing for 700,000. We'll put 200 up. Will you bring the 500? Well, for 6 month period, we'll give you 20% annualized. And it's like, for them, it's a great deal because the numbers actually make sense. If they were to get a regular mortgage, they have to spend 50 hours going through that process. They may not even get approved. And then on top of that, when they go and sell that flip or refinance that flip after, there'd be huge breakout fees for them to the tune of like 3 to 6 months interest. So it's actually cheaper for them to pay me 20% annualized for a 6-month period. And if you can line up enough of those types of opportunities, you could effectively have your money lent out, very low risk, making 20% secured against properties at great loan to values. So there is a definite opportunity in the private lending space. I've run a private lending business now for a couple of years now. It's a side hustle business for me. It's a low 6-figure kind of business that I thought about this time ramping out to being a 7-figure business because I could put a whole bunch of capital in there and really grow it. The challenge is arguing with the CRA that it's active versus passive. That's one of the primary things that I do. It is like I'm in the real estate space. It's what I do. I put deals together, and sometimes when I wholesale a deal to someone or I assign a deal to someone, they need the financing, and I'm like, hey, take my deal, 70 cents on the dollar. I'll finance it. That's how much I trust this deal. I'll give you the money to close on it if you can put up $100,000 down and do the rental work or whatever. You know what I mean? Like we'll put up some conditions, and it's a win-win for everyone. So it's like a whole symbiotic life cycle that exists, and it's a nice bolt-on to what I already do as a realtor, as a real estate investor, someone who assigns properties often that are off market. I assign them to people for profits. I did like almost 7 figures in assignments. No, over 7 figures in assignments in the last 24 months for sure, last 18 months. The market was hot then too, right? I'd find a property on Facebook Marketplace, I'd sign to an investor, make 50 grand. I could close on myself, make 150, but I'd rather make 50 and do no work. I have to coordinate any rent contractors, nothing, just make a clean, easy bit of money. So yeah, that's how I got into the space. Was people ask me, hey, Mike, you got a lot of money, you sold some properties, would you be willing to finance this property? I'm like, yeah, I'll be the bank. I'll play bank at really expensive rates, short term. So you want to pay me back quick because it's going to cost you. You're incentivized to do your flip quickly, do a good job, and you make lots of money, I make lots of money. Everyone wins. It's a lot cheaper to bring on an equity partner. If you brought on a money partner, let's say a money partner brought up 100% of the money. They paid for the renos, they paid for the purchase price, all that stuff, and you give them half the profit. If you're a good flipper and you're good at what you do, that costs you way more than borrowing for a 4-month term at 20%. So for the good flippers, they understand and they want to pay that as opposed to having equity partners. They'd much rather have debt partners because they have 100% of the equity, full control, no accountability to any partners, and it's just a great setup. So anyway, are you selling your London mansion anytime soon? If I got the right offer, I would always sell. So everything I have is for sale, but I would want multiple millions for my place. So if I got the right price for my house, I would sell it. But right now we're enjoying it, so I'll be this winter in Florida. We'll be back and forth. But this is home for right now. My kids are happy here, and unless I got the right price, not planning to sell right now. So yeah, it's a beautiful house. I love it. Yeah. All right, everyone, I gotta go. Why do banks lend out money at such low rates? Because they're taking your savings account money at 0.5% interest and lending it out at 2%. So because they're getting money at cheap sources, that's why the cost of funds is low for them. Although the cost of funds has risen considerably, which is why their prices have risen. And their margins are actually a little bit hurt right now too. So you might think, oh, rates are growing crazy, the banks are super profitable. No, their cost of funds is rising significantly. They can't even raise funds right now. It's hard to raise money in a high interest rate environment. Trust me, a lot of real estate developers and investors are going to go belly up in the next 6 months to a year because they can't raise money to keep the dominoes going. And their projects will get 80% done. They can't refinance them. They're in a hard place. They have no liquidity. And that's when it gets really interesting. When you walk in and say, hey, I'll give you half of what this is worth, but it's better than bankruptcy. And they're like, I was hoping to make $5 million. Now I'm going to make like $200K. That's life. So there's going to be some interesting opportunities in this time. And watch out, guys. It could be a good opportunity for you guys watching this. Liquidity is everything. So hold on to your liquidity. Okay, answered all the questions. Cool. I do assignments myself, so I do the paperwork myself. The assignment's all done. You bring it to the lawyer, and they transact it in the same way that any other real estate lawyer would do it. But you just do an assignment of purchase. It's literally a normal transaction. There's literally, like, realtors do it all the time. There's a standard form for it. Yeah, an assignment of purchase and sale is what it's called. That's the form. It is an addendum to the purchase and sale agreement. That's all it is. Boom, designed. Yeah, so don't pay a lawyer $2,000 to do it when you can do it yourself in like an hour. Lawyers just complicate everything. Just do it yourself. I've always just done all my own purchase agreements, all my own, wholesale agreements. Learn how to do it. Just sit with a lawyer once so they can walk you through it. Once you understand all the caveats to how one's written and how one's understood, there is no value from a realtor or from a no value from a realtor, no value from a lawyer in that situation. Rewriting the contracts. But if you want to have your lawyer review it, it doesn't cost much for a review, as opposed to a write. It's much more expensive. All right, I gotta go. Thank you so much for watching, everyone. Remember, the secret to unlocking a wealthier you: 3 levers in control of your financial future, especially in times of recession. Spend less, earn more, pick up a side hustle, and maximize the returns on the difference, the ROI. You gotta grow what you have. Don't just have it sitting in a savings account. Just put it to work at 10, 12, 15%. Get it working in real estate with leverage to make 20, 30, 40, 50%. Leverage is your best friend. Cheap debt is your best friend. It is the sword that allows you to cut through and build wealth and become a multimillionaire and find your paradise. Thanks everyone for watching. We'll see you next week. You guys know where to find me. Bye everyone. Oh, I didn't hit the button.